Greetings, everyone. Scott Richardson and Dan Brown from Richardson Capital Management here to present the January 2025 Economic and Investment Update. So we started out the year on a positive note. Financial markets performed pretty favorably throughout the whole month. Had widespread gains in U.S. We had large caps, small cap, mid cap, all were up nicely. International and emerging markets were up. So pretty solid performance in the equity markets. And in the fixed income markets, interest rates came down a bit, so that means bond prices go up. So that performed favorably as well. We've got a few things that came out that drove some of that. Namely, we got some information on corporate earnings for the year. For fourth quarter. We got some information on the Federal Reserve and what they're doing, and we got some information on how we ended up the year on gross domestic product. So with that, Dan, you want to talk a little bit about corporate earnings and how they've shaken out?
Yeah, so corporate earnings for the fourth quarter was another catalyst for the stock market. Just as we've seen for the numerous past quarters, basically going back about 2 years.
Mhm.
So at the end of the month, we were about 25% complete with fourth quarter earnings. And again, surprising both to the upside with revenues and earnings. And the full year looks like it's going to come out at about 10% earnings growth for the S&P 500, which is very solid. And as we look out to 2025, we see expectations holding steady at about 14% earnings growth. And we think that's possible. Certainly double digits. But again, corporate earnings continue to surprise the upside. And Scott, we had a Federal Reserve meeting in January. You want to give us a quick recap of what we learned at that meeting?
Yeah, yeah. Toward the end of the month, we got an update from the Fed. As widely anticipated, the Fed held steady, did not decrease rates or increase rates. As I think we've talked about a fair amount in the past, the Fed started cutting rates last year, cut in aggregate 1%. They started with a 50 basis point cut. They had another one for 25 basis points in November, and then another one in December for 25. In January, they said, "Hey, let's pause. We're going to take a wait and see approach, be a little bit more careful about future cuts." But from what we can tell in the language from the Fed, they definitely are still in the mode that they're anticipating future cuts. And I think right now we're targeting the market's consensus is one for sure, and probably a second cut, maybe so two cuts before the end of the year. Timing on those are maybe a little more unclear, but the definitely the direction is still toward the easing cycle. Talk a little bit about what are we finding about fourth quarter GDP and how we're looking on the economic front.
Yeah, so we saw fourth quarter GDP reported late in the month, and we saw another very positive quarter. So fourth quarter GDP came in at 2.3% annualized pace, slightly less than the past two quarters, but still very strong for the year. So for the full year 2024, economic activity came in at about a 2.8% pace. Very strong. As we look out to 2025, we think GDP is probably going to downshift very slightly. And as we look at the components of what's been driving GDP, a lot of it's been consumer spending. So consumer spending in the fourth quarter grew at a 4.2% pace, which was one of the strongest quarters in the past couple of years. One of the things that we're a little bit concerned about and we'll pay attention to here in 2025 is just the pace of government spending. So I think we're all aware that the government's been spending quite a bit the past couple of years. As the new administration has talked about, they'd like to cut some of that fiscal spending. So that could lead to a drag in 2025. And again, we'll pay close attention to that, see if it impacts economic activity.
So to wrap things up for the month, we had a great start to the month in terms of returns in the markets. We're looking pretty optimistic going into 2025, the rest of the year. Corporate earnings are looking strong. We think inflation's still trending the right direction, although it's been a little stickier than maybe we had hoped. The outlook from the Fed is looking pretty optimistic. So by and large, we're feeling pretty good about what we're foreseeing here. That said, there are some risks. Daniel, talk through a couple of things we're a little concerned about.
Risk could come from the new administration. So the new Trump administration has talked about, implementing tariffs, which could be inflationary. So we'll just have to kind of take a wait and see approach on that, kind of like what the Federal Reserve is doing. And then we already talked about the fact that, fiscal or federal spending could come down quite a bit in the next couple of years, which could lead to a downshift in economic activity. And then there could be the failure to extend tax cuts that are going to sunset relatively soon. And again, the new administration has talked about extending those. It's possible they don't accomplish that. We think they will, but again, the broader risks are more so around tariffs and less government spending. Then the other, it's not really a risk, but just something that we're paying attention to is the fact that we've had 2 years of pretty strong returns in the equity market, and valuations are somewhat expensive and near historical highs.
So with that, we're not going to be making any significant changes to our outlook or portfolio positioning, but obviously, as Dan said, there's plenty of things out there we're keeping an eye on, and we will make changes as necessary. With that, I want to thank everybody for joining us, and as always, please let us know if you have any questions or concerns.